Hey everyone, Cal Ewing here, and I want to share my latest deal I've got on the go here. It's a performing note in Barberton, Ohio. I've got my line cast, my hook's in the water, and the fish is just about to bite. I'm in negotiations with the note seller right now. I think he's going to take my counter offer. We'll see. We're very close. So I wanted to just update you on what's new and exciting in my note business with the goal of educating you if you're interested in investing in notes yourself, just by sharing different deals and how we analyze them, why we like certain notes, etc. So that's the goal with this, is just to show you, give you a little bit more insight on what it's like to be a note investor, and maybe one day you want to buy a note for yourself. All right, so this one is a performing mortgage note. Actually, it's not a mortgage, it's a contract for deed, which is a little bit different than a mortgage. The difference is a contract for deed is when you own a property and you want to sell it, you have a buyer interested, and instead of deeding them the property right away, you keep your name on the deed and they start making you monthly payments. You basically create a contract that's similar to a mortgage, where they owe you monthly payments at a specific interest rate, a specific loan amount or purchase price, and the borrower buyer keeps making monthly payments until they've paid it off. And then at that point, once they've paid it off, then they get the deed to the property. Okay. So the difference is it's kind of cool, is if we were to buy this note, my company would be the owner of the property, and then the borrower buyer would be making us monthly payments until they've paid it off. And then at that point, they get to be the official owner on the deed. Okay. Whereas a mortgage is a little different. If you did an owner finance mortgage, you find a borrower buyer, they go on the deed immediately, but then they owe you money on the mortgage. Okay. So it's slightly different, but the premise is, or the premise, I guess, is basically the same. All right. So first of all, let's check out this property and where it's located. This is in Barberton, Ohio. I had never heard of Barberton until this week, but it turns out it is in the southwest vicinity of Akron, and I believe Akron is where the NFL Hall of Fame is. Don't know a lot more about Akron than that, but a decent sized city in Ohio. My main goal is I want to be buying in relatively large centers. So this one's close to Akron. So I'm pretty okay with the location of this note. I don't like buying rural stuff in the middle of nowhere, but this is seems like a pretty good area. House is in decent condition. I just pulled this photo off of Google Street View. I believe the photo was from last year, so it looks okay. All right. So let's check the note itself and why I like this deal and why I'm excited about it. Well, this is a performing loan. So it originated in February of 2021. Okay, it's a 20-year contract for deed, so they have 20 years to pay it off. And it's been performing since day one. So they've got, what's that, 2 years of payment history, which is great. We're showing that the borrower is able to handle those payments. For what I've seen so far in my due diligence, they've made their payments on time. So that's great. They've shown a good track record that they're going to continue making their payments, which is awesome. Okay. So it's a 20-year note. The original balance owed was 43.8. Okay. At 12% interest. So I like those high interest rates because it means that there's more room to make a profit when you buy the note. Especially, I like to use private investors to fund my deals. And so the bigger the spread there, the higher the interest rate, the more I can pay my private investors, which is great, and they're happy about that. The monthly principal and interest payments on this contract for deed is $460.25, and they so far owe $40,713. Okay, so they've paid down about $3,000 so far in the first 2 years. All right. And so my counter offer is 33,000. They were at 34. I'm hoping they're going to take my 33. All right. So that's the note terms. So why do I like this deal again? The estimated property value. Now this is just from Zillow, so I haven't done my full due diligence yet. I would get a broker price opinion to see exactly how much this property is worth. And if it's worth way less than that, then I might not close on the deal. But according to Zillow, 93.5 is the property value in as is condition. As I mentioned, so the as is, or the unpaid balance is 47.13. So that's 43.5% loan to value. So the great thing there is there's equity there, protecting that unpaid balance. So, anything should go wrong, we've got a nice cushion there. If we need to sell the property off, we're not going to lose money, that kind of thing. Okay. So if I get my purchase price of 33,000 accepted, that would be an investment to value of 35%. So even better, right? Even more equity cushion there. I like the monthly payments great. That would yield a 16.7% annualized return. Okay, so basically that's taking 12 months of monthly principal and interest payments, divide that by the purchase price or the investment amount, which is 33,000, and you get 16.7% returns, which is awesome. Okay, but the goal is to bring in another passive income stream by collecting this $460 every single month. Okay. All right, that's it for now. I'll keep you posted on how this one goes. If you have any questions, feel free to reach out to me. You can schedule a call and we can talk about note investing. If you want to get involved in some of these deals as a funding partner, get your lazy retirement savings account fired up again. You can invest in these note deals with my company through your self-directed IRA. We're happy to discuss that. Or if you have any questions just about note investing in general, if you'd like to get started, I'm happy to give you a few pointers and tips as well. Thanks for watching. We'll see you on the next video. I'm Cal Ewing.